Traders, hi. I've got the weekly analysis video up to do today, and I'm also going to look at how the pound US dollar finished up as well after 10 years, and I'll go through a few just interesting things you can run through to really robustly assess your results of a good backtest. This wasn't a good backtest, but I'd just like to show you a few things as well about how to really break down and analyze your stats from a testing session. Alright, so I've just got a last couple of screenshots to go through. So this here, I remember an individual on the forum was discussing this, and I'm just going to highlight this. I'm not sure, he might be watching. I might watch this today, but yeah, see how that's gone through the Bollinger Band there, and it reverted immediately back. So that happened a little bit on the Aussie dollar as well. It closed a little bit okay. I got in at 79.48. This is on the demo account, and it sort of behaved similar to that. So we'll see how that goes as well, the Aussie, because it got to 79.88 was high. I think that got to on Thursday, so it sort of died down a little bit, but we'll see how it goes anyway. I wanna see it. Alrighty. Is that it? I thought I won at 392 as well. It's just gonna anyway. We'll open up 392. I think this is the same trade, just with the account balance. Pardon me, guys, if it is. The default setting now is no. I won't move this photo here. I think it is the same. Just capturing, what's going on. So it was a 2%, nearly 2% loss. So, but I'll close this down. I'll close that down. Copy this. It's the last trade that I've taken with the pound USD. We'll have an in-depth look at the results now, and I'll run it through like a Monte Carlo method as well, just to show everyone how easy it is to go on a drawdown, and that it is a normal thing. You've just got to stick with the rules, though, is the most important thing. I'm just going to save this up, guys, before I forget. Alright, so that's all done. Close that down. Okay, so here we are. So here's the pound USD. So this was with the Bollinger Band method. This is just a 2 standard deviation. Andre from the forum mentioned 2.5, and I might pursue that as well. I'm currently testing the euro. So what happened here was over 10 years, well, 12 months, so it's 9 years, because 12 months were used to establish support and resistance, and I used the weekly chart for that. But let's just focus here on the results. So 60 trades were taken, 32 winning trades, 28 losing trades. I had a handful of good runners. One of them was $274, was the best max profit trade. 110 was the max loss trade. Return was 3.25%, and the max drawdown was 1,238. Average profit 102, average loss 105. So profit per month $2.71. So that's pretty terrible. But I'll just go now to this. So this was provided on the forum that I'm on, and I just want to sort of show you guys. So what the Monte Carlo thing is you pretty much run the data through multiple scenarios, okay? Because trading is a statistics game, so you might have a method where you have a 60% win rate and it returns 2-to-1 risk to reward ratio, which is pretty good. But you might, out of the 10 trades, you're going to have 4 losing trades. You might have in that month 4 losing trades in a row. So what you've got to appreciate is you don't tweak things. But I just want to show you. So you've got the predicted win rate and the actual win rate. And just by minor adjustments, we've got, let's say it's 59.10. That goes down to 22% drawdown. 22% drawdown on 10,000, even a $5,000 account is a little significant. That's over $1,000. So something to be mindful of a little bit. And it just shows you here the different outcomes when it comes to, so blue was outcome number 5, and outcome number 5. So the difference is, it's like 5% difference, but it makes a significant impact on the equity curve. So by focusing on good quality trades is the key thing I'm seeing here, guys, and that's probably not what I did that well when it came to this sort of test. So I'm definitely going to have to be a little more picky, because as I can see here and illustrated, it significantly affects the equity curve. So where was outcome 5? Outcome 5 was blue, and outcome 6 was green. So there's the green, there's the blue. That's a 5% difference in, and it's the same risk to reward though. So it's same risk, 2% risk, and 1.3. So that means if you risk $100 each trade, well, you risk 100 pips, you're seeking 130 pips, and that's the win rate. So it's important to remember, guys. Definitely back to the drawing board a little bit, but I'm pursuing now the Euro USD, and that's about it for now, guys. So I'm gonna the actual data I inputted for here, it was I was at risk of over 30% drawdown. So that's on a 10,000 account. For me personally, that would breach my comfort level. So something to review, and we'll see how the euro goes. I'm doing the 4-hour chart, and I'll do a little bit of that later on today, and I'll put it up on the forum and also on YouTube. Thanks for watching, guys. Have a great weekend. Study, have a bit of fun as well, and happy trading, and good luck for next week. Bye.